High-quality exchange-traded funds, or ETFs, have grown to be my favorite investment vehicle as a long-term dividend growth styled investor. Now, this is because of the passive nature of investing into ETFs and the simplicity when it comes to easy diversification. But even one step further, dividend-paying ETFs that pay monthly can be key, as consistent cash flow can then be reinvested even faster with a monthly pay dividend frequency, and or of course, maybe later on, the dividends could be used for things like bills or just everyday life expenses. Now in this video, we're going to go over what I think are the 5 best monthly paying dividends ETFs in the entire market. Then share some of my opinions on each of them and showcase how each of them work and what they have to offer. Now make sure to stick around, drop a like down below, and let's get right into the first monthly paying ETF. So the first monthly paying dividend growth styled ETF is the WisdomTree US Quality Dividend Growth Fund, or ticker symbol DGRW. Now this is sort of one of the newer ETFs that I've came across, and I definitely would not be surprised within the next few years if the DGRW ETF starts to make up more and more of my overall portfolio. Now, the WisdomTree US Quality Dividend Growth Fund says that it seeks to track the investment results of dividend-paying large-cap companies with growth characteristics in the US equity markets. And by looking at DGRW's holdings, that's pretty much exactly what it looks like. The top 10 holdings for DGRW are Microsoft, Apple, Broadcom, Johnson & Johnson, Procter & Gamble, the Home Depot, Merck, Cisco, Philip Morris, Coca-Cola, and others. Altogether in this ETF, there's around 300 different holdings, which makes this ETF very well diversified, and with the top 10 holding breakdowns being technology at the top, over 30% of the entire fund. Then we got consumer defensive at almost 16%, industrials at over 14%, healthcare at about 14%, financials at around 11%, consumer cyclical, basic material, real estate, energy, utilities, communication, all below 10%. Now, one of the main reasons I really like DGRW is the fact that it has a ton of growth potential and it has performed very well on the max time frame. The ETF is up around 161.68% as far as the max time frame, and that's not even including dividends. Now, the ETF does have sort of an expensive expense ratio at 0.28%, so that's something to keep in mind, which definitely can eat up some of your profits later on, especially as you potentially buy more and more DGRW. The ETF is pretty big at around 10 billion in assets under management, and seems like it's getting more and more popular by the day. Now, as far as DGRW's dividend, it's not necessarily the biggest starting dividend at around 1.91% trailing 12-month dividend yield. But with the dividend growth over the last 10 years of 23%, the last 5, 7%, the last 3, 7%, the dividend growth is definitely there over the long term, and not to mention this ETF does pay a monthly paid dividend, which, like we spoke about earlier at the top of the video, could definitely be helpful to get some more money reinvested and to get that snowball working, or of course just to use the money for bills or life expenses. Now, DGRW is definitely one of my favorite monthly paying dividend ETFs because of the overall holding breakdowns, and the top 10 stocks within this given ETF are some of the highest quality companies in the world that not only pay dividends, massive growth potential on top of that. My next favorite monthly paying dividend ETF that you definitely have to look into if you have not already is ticker symbol DIVO or DIVO, the Amplified CWP Enhanced Dividend Income ETF. Now, DIVO is a nice diversified fund, but also uses options on top of it. Now, it says on the website why invest into DIVO. Income potential comprised of high-quality dividend-oriented stocks along with covered calls on individual stocks. So as you're going to see here in a second, DIVO does have a basket of high-quality holdings that do pay a nice-sized dividend collectively. But on top of that, with using covered calls, they're able to generate more income for investors, which of course I love getting on a monthly basis. Now, looking a little bit deeper into DIVO's top 10 holdings, we have things like government bonds, United Health Group, Visa, Microsoft, Chevron, Apple, Procter & Gamble, JPMorgan, the Goldman Sachs, and McDonald's. And even though DIVO only has around 30 different holdings within the portfolio, so it's not as diversified as some of the other ETFs we are going to go through in this video, the fact that the DIVO management does use a cover call strategy, which definitely helps against downside protection, and when the market is quite volatile, it definitely makes me feel okay, even knowing this ETF isn't necessarily super diversified. But within those given holdings, we have financials at around 17%, technology at 14%, healthcare at 14%, consumer defensive at 13%, energy at 12%, industrials at 11%, consumer cyclical at 9%, utilities at 3%, basic material at 2%, and communication at 2%. Now, as far as DIVO's performance on the max time frame, it's only up around 39%, but keep in mind DIVO does pay a nice sized dividend on a monthly basis, so that's definitely going to make up for some of the lack of growth. Also important to note, DIVO does have a 0.55% expense ratio, which is definitely decently high and something to consider if that's not really what you're looking for. But because this ETF does of course use a cover call strategy, that's going to be partially the culprit of the more than normal high expense ratio. DIVO has almost $3 billion in assets under management, and this fund has been getting more and more popular as the years have been going on. Now, looking at DIVO's dividend, it has a starting dividend around 5%, which is quite nice considering this ETF is pretty low beta and it pays a dividend monthly, which it has consistently for many years now. Now, as far as dividend growth goes, this ETF isn't really going to have all that much dividend growth, at least it really hasn't in the past few years. But for the investors like myself that are looking to earn around a 5% yielding dividend on a yearly basis, and on top of that have some growth potential, with a basket of high quality names, DEVO is definitely worth looking into. The next ETF that has to make my top 5 list as one of my favorite high quality ETFs across the entire market is JEPI, the JPMorgan Equity Premium Income ETF. Now, even though I'm sure a lot of you are already quite familiar when it comes to JEPI, let's go over what the fund does and how it works. So it says seeking consistent premium income with lower volatility, JPMorgan Equity Premium Income ETF seeks to deliver monthly distributable income and equity market exposure with less volatility, with a portfolio manager expertise of 60 years combined. This ETF has a high quality stock selection, and then on top of that, they implement written out of the money S&P 500 call options that seek to generate distributable monthly income. Now, JEPI has a pretty high quality basket of top 10 holdings if you ask me, things like Adobe, Amazon, Microsoft, Progressive, MasterCard, Intuit, Accenture, abbvie, CME Group, and United Health Group, around 130 different holdings altogether. Now, as far as the JPMorgan Equity Premium Income ETF's total growth over the long term, as far as ETF price, it's sort of lack thereof. It's up around 4%, and this is partially due to the basket of holdings, but also partially to blame because of the cover call strategy, which of course does limit upside if the market and the basket of holdings within JEPI choose to rip. But with that being said, this ETF is up around 4.6% on the max time frame, but of course the massive dividends that JEPI pays have made up for some lost ground. Now, JEPI has a 0.35% expense ratio, which in my opinion is pretty fair considering what this ETF has to offer, and almost 30 billion in assets under management, making it one of the most popular ETFs in this sort of class. Now, speaking of dividends, JEPI is currently offering around a 9 to 10% trailing 12-month dividend yield, and even though JEPI does pay a monthly dividend, over the last few quarters, the dividends have been sort of falling off a cliff, getting smaller and smaller up until recently. With some new volatility being introduced into the market, the dividends have finally perked up a little bit. But over the long term, JEPI has paid a nice amount of dividends, and this has been one of my largest holdings as far as all the ETFs we're going to go through today over the past several years. My next favorite monthly paying dividend ETF is going to have to be JEPQ, or JEPI's brother or sister, the JPMorgan Nasdaq Equity Premium Income ETF. Now, JEPQ says it's designed to provide current income while maintaining prospects for capital appreciation, generating income through a combination of selling options and investing in U.S. large cap growth stocks, seeking to deliver a monthly income stream from associated option premiums and stock dividends, seeks to deliver a significant portion of returns associated with the Nasdaq 100 index with less volatility, and constructs a long equity portfolio through a proprietary data science-driven investment approach designed to drive portfolio allocations while maximizing risk-adjusted expected returns. Now, although I do currently personally own more shares of JEPI as of right now throughout my portfolios, I've also acquired hundreds of shares of JEPQ over the past few years, and this ETF has performed very well year to date, up over 16, almost 17%, not even including dividends. Now, JEPQ's performance is largely driven to, of course, the top 10 holdings, and with technology being almost 50% of this ETF is of course going to flourish when those types of holdings find some love in the markets. But with companies like Apple, Microsoft, Alphabet, Amazon, and Nvidia being some of the top holdings, there's no secret on why this ETF has done so well. Now, JEPQ has a 0.35% expense ratio just like JEPI, and has around 5.85 billion in assets under management, and I would not be surprised if that keeps going up over the years. Now, even with JEPQ's massive performance as far as the ETF price, this ETF has a trailing 12-month dividend yield of around 12%, which has been very nice for me being a shareholder of JEPQ. And even though the recent dividends over the past few quarters have been a little bit smaller than the previous few quarters, the monthly paid dividends have been pretty consistent. And who am I to complain if I'm yielding around 8, 9, 10% while having some upside potential at that? Now, the last high quality monthly paying dividend ETF that I've personally been holding for a while is the Invesco S&P 500 High Dividend Low Volatility ETF, or ticker symbol SPHD. Now, it says that this ETF is based on the S&P 500 Low Volatility High Dividend Index. The fund will invest at least 90% of the total assets in common stocks that comprise the index. Now, SPHD is up around 55% or so over the past about 10 years. The expense ratio is decently high at 0.3%, which is definitely something to be a little bit concerned about, and the assets under management are around 2.88 billion. But more importantly, some of the top 10 holdings of SPHD are some of the dividend payers that you and I probably have loved at one point, but there's definitely a few in this group that I would not mind taking away. Things like AT&T, Ultra, Verizon, International Paper, Kinder Morgan, Prudential Financial, Williams Company, and others. All in all, around 50 different companies make up SPHD, with utilities being the leading sector, then real estate, healthcare, energy. Now, as far as SPHD's dividend yield goes, it's around 4.7%, which is why this ETF obviously is sort of popular. And as of recently, SPHD did pay a much higher dividend than we've seen over the past few years, so that could potentially be bullish for SPHD investors. But this ETF out of the rest of the bunch is definitely not my favorite, but I do have some shares of SPHD in my portfolio. So there we have it. Those are 5 of my favorite monthly paying dividend growth ETFs that I've been buying for years now. Out of all 5 of the ones we went through in this video, comment down below your absolute favorite and let us know why. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.